What's up, Money Minds? Welcome back to Market Briefs Video Edition. Today is October 4th, and here's some business and financial news you can finally use. The first day of October was Friday, and it looks like the market snapped back and rebounded. Overall, here is the reality of the situation. Stock market can be very volatile, especially during the end of the summer months and into the fall. If you want to learn more about stocks, investing, or just long-term wealth in general, our team put an article together on exactly that over on theminoritymindset.com, and I'll link it for you in the description below. Next up in our market preview, like we said before, the major indexes soared back into the green on Friday. The Nasdaq even snapped a 5-day losing streak. In addition, news of an oral treatment for the Delta variant helped spark a comeback rally for the broad market in general. Coming up this week, though, the U.S. debt ceiling will be in the news again, and we'll be following it very, very closely. In our financial tip of the day, it's time to break all of those bad habits. Stop spending money on things that don't make you money. That way you will have way more money to buy things that actually do make you money. In other words, use your money better, live below your means, and make money actually start working for you. If you want to learn all about that and how to break 5 very common investing habits, our team wrote an article on this exact topic over on theminoritymindset.com, and I'll link it for you in the description below. In our first main story of the day today, it's time to take a look at that inflation gauge again. But before we get into all that, I need you to do me a quick favor and smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. Thanks for that. It looks like the Federal Reserve is dropping some seriously bad news again. This time, a key inflation gauge, which is watched super closely by the Fed, hit another record high. Core inflation jumped by 3.6% in August from 1 year ago. That's the biggest jump in over 30 years. Inflation has been going up. Why is that? Most of these core price increases can be attributed to supply chain issues. Demand for basic goods and services are higher than ever right now, and supply chain woes are keeping that demand way backed up. Across the pond, though, our friends over in Europe are seeing inflation gauges rise as well. In the other 19 countries that use the euro, inflation jumped to 3.4%, the highest number since 2008. And spending in the U.S. is up too. The Commerce Department reported that prices jumped 4.3% in August from a year ago. Consumer spending also rose by 0.8%. In our second main story, the United States is not too far away from defaulting on its debt for the first time in history. If Congress fails to pass or suspend the debt ceiling by October 18th, the United States will be in default. Currently, the United States carries over $28.4 trillion, yes, trillion with a T, dollars in debt. By definition, though, a default happens when a borrower is unable to make payments on time, misses payments, or just avoids them entirely. This is kind of the same as if you defaulted, but a little bit different. If the U.S. was to default on its debt, then the government wouldn't be able to pay any or all of its bills. If this was to happen, then the U.S.'s credit rating would be slashed, similar to what would happen to you. In other words, if the United States government was to default and its credit gets slashed, it would be even more difficult for it to borrow in the future, and this could definitely affect you personally. Also, if the United States was unable to pay government bills, then it would have insufficient funds to make payments on government programs. Things like Social Security payments and interest due on bonds would eventually change. The fallout from the U.S. defaulting on its debt would be pretty jarring and could spur the economy into a financial crisis once again, so recession 2.0. Now, nothing really has changed or happened yet with the United States debt dilemma, but we'll keep you up to date with anything that changes. That's it for our main 2 stories of the day today, so let's take a quick break to talk about today's sponsor, M1 Finance. Many brokerages will charge you every time you invest more money. Well, M1 Finance is not like most brokerages. They let you passively invest money without paying a penny in commission. And with M1 Finance, it's as easy as 1. Just pick your pie. That shows M1 Finance how you want your money to be invested. 2. You'll need to set up automatic deposits. So a percentage of your paycheck will automatically be invested every period. And 3. Just sit back and let the market do its thing without worrying about any commissions. If you're interested in investing with M1 Finance and want to learn more about the services they provide, I'll leave a link in the description on exactly how you can do that below. Thanks again to M1 Finance for sponsoring this video, and now back to the news. In our next story, let's talk about some money slips and some definite mistakes. That emphasis was on purpose because we're going to be talking about DeFi here. A DeFi bug accidentally gave away $90 million to users on the popular default protocol Compound after an update went very, very wrong. Compound founder Robert Leshner begged for users to return the money, promising users could keep 10% of what was given. But the rest must be returned or the IRS will just report it as income and the users will be doxxed. Doxing in this instance would mean that private information went public, which is a big no-no in the cybersphere. This response is getting a lot of backlash, particularly because threatening to dox customers is a really bad business move, and also involving the IRS is an empty threat since users are not obligated to return the funds and can have it just taxed like normal income. At the moment though, Compound is the 5th biggest DeFi protocol in the world with a total value of around $9.65 billion. In today's Mind Blown, we love to see it. If you're loving the puns, make sure to drop a like. El Salvador started mining Bitcoin using energy from volcanoes. So far though, the country has only mined a very small amount of Bitcoin, which is only worth around $269 US. Earlier this year, El Salvador President Bukele promised to open Bitcoin mining facilities using cheap, clean, and renewable geothermal energy. Last week, the president teased the project by sharing a video that has now amassed well over 2 million views online of Bitcoin mining rigs, an energy factory, and miners working outside of a volcano. El Salvador is known as the land of volcanoes and relies on geothermal energy for over a fourth of the energy production in the country. But they are not the first to make this move. Iceland has been mining Bitcoin using volcanic energy since crypto first came around. In case you missed it, over the summer El Salvador became the first country to adopt Bitcoin as legal tender, coexisting with the US dollar. Next up is our Pick Your Brain section, and we'll start with today's second sponsor, Policy Genius. Life insurance is confusing, so let a genius help. Policy Genius does all of the work to compare life insurance policies for you. With zero hidden fees and unlimited service from experts, Policy Genius will find you the perfect plan at the right price. So if you want to get a quote and learn exactly how much you can save with Policy Genius, I'll leave a link to them in the description below. In our second Pick Your Brain of the day today, it is once again lumber season. Lumber prices are in fact soaring again. Futures are nearly up by 40% since the end of August. Currently though, prices sit at around $627.50 per thousand board feet, and lumber prices are as high as they were before the pandemic. Next up is our Money Mind section, where we pull comments directly from you all on our YouTube, Instagram, and TikTok accounts. Today's comment is from Down My Basement on our YouTube channel, and the comment is kind of a quote of a quote, and it reads, "When you are pointing at someone else, there's 3 fingers pointing back at you." I'ma just let that sink in for a second. That's deep. But the moral of the story here is don't blame anybody but yourself and keep hustling no matter what lemons life throws at you. If you want to watch this video where this quote actually came from and watch Jaspreet's unfiltered rant on the issue, I will leave a link in the description below on exactly where you can find it. That is it for today's business and financial news. Thank you so much for watching. Keep hustling, Money Minds, and I'll see you all in the next one.